Now that we're beginning, this does not mean that what we had covered initially is not relevant. In fact, they are tied. They are tied, and you need to understand everything. Okay, so in forex. Okay. Yes. So supply and demand, and before we begin supply and demand, I just want to cover something small and just to explain to you an analogy that I came up with for you to understand why it is important for you to have an understanding on demand and supply when it comes to trading forex. Um, I do believe I'm audible na kila mtu ananisikia, right? Ko sawa? Ama yes, okay, sawa sawa. All right, so let's proceed. So now, in the markets, we do have two types of traders. We have two types of traders. Forget about the what I said about types of traders in terms of the times that you're holding and all that. Now we have two types of traders when it comes to the supply of liquidity in the market. Number one trader that we have in the market are retail traders. And for us, we're an example of a retail trader. And basically, a retail trader is someone who has just funded an account with a small amount of money. Let's say you're trading with $1,000, you're trading with $10,000, you're trading with $100,000. That's you. In all that case, you're considered as a retail trader because, like, you don't significantly contribute to the direction of the market. You realize that retail traders are many in the market. However, they have no control over the direction of the market because they trade using small amount of money. But for institutional traders, we talk of banks, we have floor traders, we have insurance companies, we have the hedge funds. These are people who trade with billions of dollars. And these are guys who dictate the direction of the market. Okay? They dictate the direction of the market. For you as a retail trader is for you to follow what the big banks, what the institutional traders are doing. And this is very important because when it comes to analyzing the market, you want to trade with the direction of the institutional traders. If the institutional traders are buying, please buy because it means like what it means is that okay, let me just give this analogy so that you get the concept of the retail and institutional trader. Now here, when you look at this slide, I have two photos here. We have the shark and the small fish in these in these in these photos, and for the big shark, they normally feed on the small fish. I believe that's true. That's my understanding. The big sharks feed on the small fish, but they only feed on them when, let's say, they open their mouth and they come across the small fish that are swimming in the opposite direction. Like they are coming the opposite direction, so zinakam zinaingia kwa mdomo direct. However, for the small fish that are swimming in the same direction because ziko kwa mgongo, it's hard for the big shark to eat them. Okay, so for the small fish to be safe, they swim with the flow of the big sharks. Okay, now let's come back to the market. The big sharks in this case represent the institutional traders, and the small fish represent the retail traders. Okay, so when we talk about eating, being eaten by the big shark, it means you are making loss. Like your money has been eaten by the market, has been absorbed by the market. So what I'm saying is, for you to be a profitable trader, you have to identify the direction of the big sharks, or else you will be eaten. For you to become a profitable trader, you have to do what the big sharks are doing. If they are flowing to the south, please make sure you swim to the south. In this case, south might mean like they are buying. If they are buying, please buy. Ride the wave with them. Because if they are buying, it means the market is going to push up. So you have to ride the wave with them so that you benefit from that wave. So if they are flowing to the north, please make sure you don't go to the south, because the moment you go to the south, it means they are selling and you are buying. What does that tell you? It's going to hit your stop loss. Okay, so that's the analogy, and it's the same analogy that we are going to use in understanding demand and supply. Okay, I hope that analogy is well understood. So now let's move on. Now I have drawn a chart here. It's the movement of of what we call the movement of price, which is dictated by the balance between the supply and demand. Okay, it is dictated by the balance between supply and demand. And before I cover this, let me take you to the other slide, so that when I come to this, you will have something. There is something that I need to cover in the other slide. So let me project the other slides, so that when I explain them together, you have a better understanding. Okay. Yes. Stop sharing. Then I share the new one. Sorry, just reacted instead of sharing. Yes, here we go. We go. All right. Let's have a look at these market faces. Sawa. The reason I wanted to explain it this is so that you can understand this, so that when I go to explain what we have there, which is almost, in fact, I will explain it here. It's the same as this what we have here, so that you have a clear understanding. Okay. Now let's dive in. Now market moves in what we call four phases. Okay, please note that this is different from structure of the market, which we had uptrend, downtrend, and consolidated. Now within uptrend, you'll find we have two phases, and in a downtrend, you'll find that we have two phases as well. And I'm sure now that you've interacted with the chart, you can tell you've realized some sections where market pretends to be consolidating and then it pushes up. In fact, these phases, it's just like this is an example of a consolidation. This is an example of a consolidation. This is an example of a consolidation. The same case to this. Okay. So in an uptrend, market will do what we call accumulation, and this accumulation will be in form of a consolidation. This phase here, in an uptrend, the market will consolidate. Now, when market is consolidating, like I said, it means like we have an equilibrium whereby buyers and sellers have equal strength. In other words, now explaining this using the supply and demand terms, it means the supply and demand are equal. They are at an equilibrium in such that we don't have excess supply and we don't have excess demand. So what is being supplied by the sellers, it's being bought by the buyers completely. It's enough to satisfy their demand. So you will find in such a case, you will find like we get what we call the accumulation. Then market will either go up or down. This is dependent on the action that suppliers or buyers are going to take. For instance, most of the time, when we have that equilibrium price in the market, you'll find that let's say for example, milk is retailing at 50 bob. You see, everybody is aware of that milk is retailing at 50 bob. So now when now you are at an equilibrium that the supply and the demand is like there is that equilibrium, it will get to a point where demand is going to exceed the supply. And when demand increases in relation to supply, you know what traders do? They will hold the supply so that the price will shoot. Right? So when the demand is more than supply, we see that in that case there is what we call disequilibrium, whereby now the price that will force automatically, like the market will readjust itself by price going up. Okay, now that is what we call this trend up, and in our case now we'll call this as bullish move. That is to mean institutional traders have injected more buy orders into the market. So, okay, institutional traders, they have dictated that the market is going to buy. So it's for you to know that, oh wow, the big sharks wameamua tupande juu, so ride the wave with them. Make sure you buy. Okay, so phase one is accumulation. Okay, when we get accumulation, the market has gone up. It won't go up forever. No. We get to a point whereby after sellers have realized that the demand is high, more sellers will come into the market. I mean, more guys who are ready to supply the same commodity are going to come into the markets. Okay? And now, like for instance, you find that it's the tendency of let's say for instance, you've realized like guys who are selling face masks are making a lot of money. You'll also want to get into the same business. And now, since more suppliers are getting attracted into the business because of the demand, now you find that the supply will exceed the demand, right? The supply is going to exceed the demand. And what happens when now supply exceeds demand is that you'll find yourself you have a lot of stock in the market. You have a lot of stock that you bought. So what you do for you to be competitive, what do? You reduce the price. Okay, so now in that case, now price goes down. This phase here now, up, price inashuka, right? This phase here. Now price ikishuka haitashuka forever. What happens is after the price imeshuka, now you as a buyer, you will be attracted to buy more when the price imeshuka. In fact, you'll be attracted to buy more mask, stock kwa nyumba, because the price has gone down. Okay, so you find now the demand increases again, which now forces the suppliers to push the price up. So it's a continuous phase whereby supply and demands are in play. Okay, and the direction that the market is going to take is going to be dictated by the suppliers and the buyers. Okay, yes, so that's what happens. So this phase is accumulation, and the phase whereby you find that the suppliers have increased. I mean, the supply and demand is equal after they push up its distribution, then we go to reaccumulation, and then market inapanda, the process ina repeat itself. Okay, so you will find that in market you find we have zones where market is playing this type of a thing. And if I was to take you to real chart, allow me to take you to real chart so that I just demonstrate that in a real chart so that you can just get an understanding of what I'm saying. Now this is Bitcoin. This is Bitcoin, and I'm sure you can see those phases in the market. Let me go to fast. So now let me just clear everything here first. Now look at this, look at this, look at this. Where do I begin? Let me begin here. So this is what we call what? This is phase one. Now we have this consolidation, which now it is now the accumulation phase. This, and now what does the market do after that? The market is going to accumulate like this. Now in this case, the demand and supply are the same. Sawa sawa? Then what will the market do? Market ita push, and then we get another what? Me first label here. So now we get another phase of reaccumulate of distribution. Sawa? So we began with accumulation, which is this one here. This accumulation. Now the market has pushed up. Now in this case here, it means that the demand has exceeded supply. That's why we have this buy move. So in this case, it means now demand exceeding supply. It means like the institutional traders, that is the banks, the hedge funds, the guys trading the flow, have decided to take buys. Okay, a buy in business is demand. Sawa. A sell in business is supply. I hope you guys understand those times. So when now they decide to buy, to inject more demand, sasa they wanna buy Bitcoin. Now it means the demand for Bitcoin is higher than what is available. That's why the market goes up. And doesn't go up forever. It goes up kidogo. Sawa. Then inapanda. Alright? So in this case here, it can go up hivi, then ishuke kidogo accumulate hapa, then ipande juu. Or it can also do something like this. It can accumulate, go up, do something like this, then go up. So the two scenarios are possible, right? So it's for you to observe what the institutional traders are doing. All right. Now that continues. We have another one here. So I just wanted you to see like those are the phases which markets undergo. Sawa sawa? You have to watch such phases in the markets. Right? Another one is here. Another one is here. Yes, so that's how market operates. How? Now let's go back. We'll see how this is applied in trading. So you guys don't worry, don't worry, don't worry. Yes, so this is exactly what is demonstrated in this slide. Um, this is exactly what is happening in the market. I'm sure you have seen this in real market. Sawa sawa? Yes. So now let's discuss what are supply and demand zones. Now, so I began by saying like financial markets operate by the universal law of supply and demand. So it's not a law that is only applicable in forex. You've seen it in the market. I have given an example of face mask, nyanya, and all that. So clearly, it's something that is applicable. And this is a universal law. The law of demand states that the higher the price of an item, the fewer the demand. And I've said when it comes to demand, it means buyers. Sawa. When it comes to supply, it's sellers here. Okay. Yes. So the law of demand states that the higher the price of an item, the fewer the demand. Okay. That means buyers don't want to buy at a higher price. You as a buyer, when you go to buy a kitungu, you'll choose the mama mwenye akona the cheapest price. So you realize that mwenye akona cheapest price has more buyers. The one that is expensive akona same case. How many of you go to buy clothes to Mr. Price na wenye wanaendanga Eastleigh? You find that Eastleigh kumeja. Kuna hata jamu ya watu, but when it comes to Mr. Price, watu watatu wawili hivi. So that's the same case. It's the law of demand and supply. It's the law of demand whereby price it's the determinant factor of the number of buyers who will buy. I don't have to explain a lot here. The lower the price, the higher the demand. That is easily for you. The law of supply. The higher the price of an item, the higher the supply. Why? Because you as a trader, you want to like be involved in a business whereby the price is high. I mean, the profit margin is crazy. So you will be attracted to being involved in such a market. So the higher the price of an item, the higher the supply. In fact, the law of demand is the opposite of the law of supply, whereby the higher the price of an item, the higher the supply. But for the demand, the higher the price, the lower the demand. Okay. Yes, so the higher the price of an item, the higher the price, the higher the supply, and the lower the price, the lower the supply. You want to be involved in a business whereby the profit margin is just few cents. Okay, not just wasted of time. So in other words, that says when price go up, it's basically going up to find sellers. Yes. Why? Because we have said when price is high, sellers are more. Okay. But price comes go low to find the buyers because buyers just want to wait for the price to go down so that they buy. All right. Yes. So that's exactly what the law states and all that. So there is no rocket science in that, and I believe to may understand. So now here is now where the most important thing comes in. Okay, guys. This is where the most important thing comes in. How to find a supply and demand zone in the market. This is very important. I want you guys to be careful. Two steps in order to identify supply and demand. First, look at the start of accumulation zone for demand vibe. Then look at the start of, okay, that for the demand, you look at the start of the accumulation. Na tumesema accumulation ni pale chini. Sawa? All right. the origin of a buy is the demand zone. The origin of a sell is the supply zone. Simple. I have just
Here's
simplified
what I
that.
wish I
Are
knew
we going
before I
to
started investing. So, firstly, you don't need to be rich to start investing. And what I mean by this is
change of character? Yep. This change of character, the ones we noted here. So that's why I was saying we are looking for the break of structure here. Anyway, that's not what we are learning about. Let me just clear my analysis for now so that we learn. Now, the statement I've made is the origin of a buy is a demand zone. So this buy here has originated from this point here. So this is what we call a demand zone. Wacha. This is a demand zone, okay? Because we have a buy that has originated from that point, and this is the buy here, EOT. Then it got a small consolidation here, then another buy came from there. So this is what? This is a demand zone. Okay, Waku? Right. Now we got another kabai here, so this is a demand zone. Okay. Then we got another buy here, Iapa. So this is a demand zone. Sawa sawa. However, now look at this point here. We are getting sales from this point. So these are supply zone because we are getting sales from here. Same case, we have this sale here. So these are supply zone. Same case that continues. We are getting a sale from this point. We are getting another sale from this point. So anytime we get a sale, the origin of a sale is a supply zone. Sawa. We get a sale from this point, this is a supply zone. Sawa. All right. What has happened here? Let me use different color for these ones so that you can be able to differentiate. So acha nitumie color gani? Nikitumia red itakaa iko sawa. So these are, ukiona red unasema ni supply zone. Sawa. So now look at this. Is this a supply or demand zone? Someone from the knee, so that I see you getting. Is this a supply or demand zone? Anybody can shout. This one here.
Demand.
Yes, it's a demand zone. Why? The reason being we have gotten a buy from that point. Okay. Same case. Look at this here. We got a buy from this level. So these are demand zone. These are demand zone. Now we got sales here around upper. So this is a supply zone. What is this? Shouts. Ukitype sitaona niko kwa nini tofauti, so it's better you shout. What is the
Demand.
demand zone? Yes. So what about this
Demand.
demand? Just like it's that simple, but these are game changer. I want you guys to understand. It's a game changer. It's a game changer. So now, like that statement, I've just validated it. Okay, but there is a way of identifying them. There is a way of drawing them. Remember, sijachora hii nini yote. Nimechora wapi? Hapa hivi. Okay, sijachora hii nini yote. Nimechora hapa hivi. Okay, sijachora hii nini yote. Nimechora hapa hivi. In fact, so that we go with speed, please allow me not to use the notes niwafunze. Sawa sawa, so that we move with speed. Because hizi slides ni mingi bro. Hizi slides ni mingi manzi. So allow me not to use the slides. Allow me to go to explain to you what is in that slides, in that entire slides. Okay, guys. Now that will require you guys to rewatch the video because I believe you guys are recording. So now it's important that you understand the difference between a demand and a supply zone. Now there is this statement that I'm making, and I expect you guys to write it. It stays. I hope you have notebook. It says demand and supply zone are one use. Najua inaweza kaa kama si grammatically correct, but just write it that way. They are used once. One use, I mean they are used once. Okay? Demand and supply zones are used once. In other words, only unmitigated demand and supply zones are valid. Only, I'm dictating, only unmitigated demand and supply zones are valid. I'm going to validate a statement. I'm going to explain it, what I mean. Write another statement there and say, mitigated, what I mean by mitigated is mitigated. So mitigated demand and supply zones are invalid. Mitigated supply and demand zones are invalid. Okay? Are we there? Are we there? I want to dictate some notes. So please, let's go on. So andika subheading, qualities of a valid supply and demand zone. Qualities of a valid supply and demand zone. Qualities of a valid supply and demand zone. Number one, are we there? Must cause break of structure or change of character. A valid demand or supply zone must cause a break of structure or change of character. And number two, state that must have a liquidity pool to target. Must have a liquidity pool to target. I'm going to explain this statement so you don't worry. Must have a liquidity pool to target. Yeah, full stop. Number three, must have liquidity to take. Must have liquidity to take, or must take liquidity, either how you put it. then eka star, kaeke star kwenye statement yenye na make, because it doesn't apply always. Say must have an imbalance or fair value gap. Must have an imbalance or fair value gap. All right, let me explain.
Unaweza rudia the first point kindly.
Nishasahau hadi, like sikuwa nasoma mahali. Nilisema gani? Someone ya kwanza ilikuwa nini?
Must cause break of structure or change of character.
Nakaa ulikuwa distracted na mpenzi. Anyway. All right, so we move. Now let's come here. Now I'm not going to cover those points today, but what I'm going to do is I'm going to explain to you what the first statement means. Must cause a break of structure. Well, now let's dive in. So when it comes to demand and supply zone, these are the zones that we take entries from. These are the zones that we take entries from. Okay? These are the zones that we take entries from. So, so number one thing that we should learn is how to draw a supply and demand zone. How to draw it. Now, I'm going to give an example of this. So, actually, you'll find some guys call them order blocks or order blocks. So order blocks is basically for someone who doesn't want to specify is it a supply or demand zone. So you can call supply zone as an order block, you can call a demand zone as an order block. They mean the same thing. Okay, it's only that order block is general. It hasn't specified whether it's a supply or demand zone. That's important to note. Now, an order block or a supply and demand zone is formed when there is that interaction between two opposite candlesticks. So it's formed when there is two opposite candlesticks. Like for instance, let's take this one here. We have a sell candlestick here and a buy candlestick. They form a demand zone. So you identify it by choosing this the top of this candle, the top of the opposite candlestick and the bottom up. Hiyo hapo hivyo. Okay? Let me reduce the need so that you can be able to see it. You see, like I have covered, there is a video that I'm going to share. I have covered this top of this and the bottom of this. So like this. All right. Okay. Yes. So there is a statement that I made that I said they are one use. It means, when, like for instance, this one is unmitigated. By the word unmitigated, it means the price has not come back there, that it has not been used. In fact, you can write they are used once. In other words, when a price forms a demand zone, price must come back to that point. That's a rule. Price must come back to that point. So if I extend this like this and I realize price haijakuja hapo, this is what we call unmitigated demand zone, or you can call it order block. Okay, this is the unmitigated order block. Price haijakuja back here. Okay, are we there? All right, now I'm going to give another example. This one here. I want you to see nimechukua zones zipi. Nimechukua the bottom of this red candlestick and the top of the green one. So you extend it like this to see whether it is mitigated. So this is an unmitigated supply zone. You can call it an order block because the price has not come there. So if the price comes back to this point here, price must react. It must, when I mean like valid, it means like you can take a sell trade from this point here na ishuke vizuri. So, however, if it comes na irudi hapo tena, it's not going to do anything. Itafanya even a breakthrough. So it means you have to identify, for you to take a profitable trade, you have to place it in supply or demand zones. Allow me now to start using order blocks because it's general, because nikisema supply and demand zone or nafanya statement inakuwa kubwa. So you have to check for order blocks that are not mitigated, that are unmitigated, because they are one use. When price comes to that point again, it's not going to respect it. It's going to break. It's going to go past. Okay, and I want to give a number of examples so that you can understand what I'm saying. Okay. Now, let's take an example of which one? Want to take a valid one here. Now, let's come here. This one here. So we drag it like this one. You see, price has come to this point na ime respect, right? Imekuja na ikabuy. The other time the price is coming here, you see what it did? It went through because the zone was already mitigated. So you can all depend on this supply zone once. I mean, these are demand zone. You can only depend on it once. Okay. Now let's take an instance of this supply zone here, demand zone here. You see the price has come to this point here. Na ime respect. The other time imekuja hapa imefanya nini? After imekuja ime break. All right? Right. Very nice. I want to validate my statements. Now, let's take this example here. So we have weeks. You see price imekuja hapa kwa hii supply, it is a demand zone, ika respect, and the other time the market came to this same zone here. You see what it did? It break through. The other time imekuja hapa ni this point. Okay. Now, so that is exactly what happens. So the moment the market is going to come to this point here, we expect the market is going to hold, like the market is going to take some buys from this point here, itapanda, and the other time is going to come here, it's going to break past it. That's the law of using demand and supply zone. Like the moment market comes to this point, it has to do exactly what it did here. When it went up, so it is going to go up. But the next touch, because it has mitigated the zone, by mitigating it means like the zone has been revisited or the zone has been used. In fact, by the I don't want to complicate you this thing by telling you what happens, but let me just touch something on this. So what happens here, it means like this, it means we have some demand holders here. We have buy orders in zimeachwa hapa. Sawa. We have some buy orders in zimeachwa hapa. So the moment market imekuja hapa, inapatana hizo orders, and those buy orders are the ones that make the market go up. Sawa. Those buy orders zenye zimeachwa hapa ndo zinafanya market go up. So the other time the market is coming to the zone again, there are no buy orders to push the market up again. So that's the the business behind market coming to this point, respecting it, and when it comes back to the same point, it's not reacting. It's because the buy orders that were here have been filled, like washauzwa. Wale wase walikuwa wanataka kubai hapa in other words, wase walikuwa wanataka kubai hapa washauziwa, so hakuna wase wengine wanataka kubai hapa. That's why it's going, the price goes down. Is that clear, guys? Are we getting? Kwa sawa? Yes, natumia lugha ile, so you can like it's good. Let's move on. Leo na unaweka content mingi, msijali. You're going to rewatch the video, okay? Yes, so anytime that you find that the market has formed a demand zone or supply zone, the market has to come back to that same point. However, not all order blocks are valid. Okay? I mean, not all demand zones are going to hold the price. Sio zote. And that's why nimewaambia only valid order blocks, they must have those characteristics zenye nimewaambia hapo. The first one was it must be an order block that caused a break of structure or change of character and all that. Yes, so you don't go ahead and start identifying all the order blocks hapa zote, unasema kama hii unaiweka, unakuja, you get all of them zote. No, that's not the case. Let me show you. Look at this. Let's come here. Let me even clear everything. I'm just giving a few examples, but we're going to practice on that so that we get more examples. I'm also going to give you some assignments so that I see you've learned how to identify the supply and demand zones and all that. So you don't worry. So let's take an instance, this movement here. We have a break of structure here. Right? We have a break structure. Where did the break of structure come from? It came from these, let me go to 1 hour time frame so that you can clearly see that. So we have this break of structure here. And now for you, on this line, we have several demand zones. We have this one here, and we have this one here. But a clear look, this one ain't hold the market. Ask your question, why? So that's why I've said we have a rule that helps you know the demand zones that are valid. The only valid demand zones are the ones that cause break of structure. And in this case, this one did not cause any break of structure. That's why after the market has come to this point, it may break. Okay? So this was the valid one here. So you just extend it like how? Like that. That's why you have this buy here, and you're going to get a buy from this point here. That's a valid trade. Okay? However, there are some other nini that you have to put into consideration, including the kuna nini nitawafunza correlation yenye I introduced during the first lecture. Nikamwambia leave alone the story ya correlation, we are going to cover it. So you have to implement it here. But these are very valid one. Market has come to the zone, and that's why unaona we have this buy here, and we expect the market to buy at least to some zone here, right? Now, I want us even to look at this market here, the internal structures. Aka ka move tuka kwa hapa hivi. The internal structures. So this market here formed a supply zone here. And this supply zone market may come back. So the moment the market is going to come back to the same points, it's not going to respect it, it's going to break through. So we call this as mitigated supply zone. So now moving on, we have this one here. So okay, I'm focusing on the internal structures, please kindly note. Hizi ziko hapa hivi. Hizi ndo na focus nazo. Yes, so look at this. As the market was coming to give us a break of structure here, it left behind a supply zone here. You see, the break of structure here came from this supply zone here. That's why the market may come back to that point. And after it has come back to that point, in this case here, we have two. I know you're going to ask me that question. We have the two, and they are valid. Okay, so we have this one and this one. So the market has come back to the first one. Na imefanya nini? Imetupea a break of structure here. Where did that break of structure come from? Kuna kanini kako hapa. This is another supply zone, you see. So when market is going to come back to this point also, it's going to continue going down. That's why nimesema this buy might buy and come to around this point here, because if you look at this clearly, you'll see that is if we get a break of structure, it will have originated from this point here. I'm validating the first point that I gave, that for any order block to be valid, it must have caused a change of character or break of structure. So you will realize in between we have to other supply zones that are not valid. So you have to put them X. Tomorrow I'm going to introduce another concept of narrowing down to know the exact supply or demand zone to select. I'm going to introduce you to the concept of premium price and discounted price that is tied to it's tied to the discount price and all that. Let me start. Yes. So I don't know. Nimeongea mingi leo, but tomorrow I'm going to repeat the same thing. Nishachoka already. Yes, so tomorrow I'm going to repeat the same thing, but it will be much of practice. I want you guys to revisit that video again, so that tomorrow, as I'm repeating the same, as we are doing practice, as you are asking me those millions of questions, you have already reviewed the video, seen what I've taught. Okay, I'm also going to send another video that shows you this is what I've demonstrated here on which tab is that? On identifying the supply zones easy, like how you draw them. Like you don't draw hiyo kipati chote, you draw hadi hapa. I'm going to share a video that is showing that. Okay. Yes, kuna kamuhindi fulani kanaelezeanga that, but for that kamuhindi, please just listen to that video. Usikafollow. Ukikafollow katakupoteza hizo vitu zingine. Ako kamuhindi nataka tu ujue hiyo supply and demand peke yake. Sawa? Yes. Ule jamaa nilituma wa Fonton ako fiti kabisa. Anaitwa Lewis Kelly ako sawa. Those are the two guys wenye nimewalao kuwa mnawatch videos zao. Sini sawa? Yes. Can we call it a night? Tomorrow, please try as much as possible usiende sherehe, because what I'm covering is very, very paramount. So you can stop recording. Any question?